5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A potential escalation in the war with Iran, pushing oil to a 4-year high. The U.S. said to be weighing new military options. Alphabet leading the way with a solid payoff from its AI spending. Meta lagging. Apple is up next. And Treasury steady now after a divided Fed sends the 30-year yield above 5%. PCE and spending data on deck. But it's been fireworks around the world with aggressive verbal intervention out of Japan in the last hour. Let's get over to Tokyo to Alice French for the latest from Asia. Alice.
Good morning. Yes, look, we've had a down day here in Asia with the benchmarks mostly ending lower. I think partly the rise in oil that we saw overnight has not been helping sentiment, particularly also what we had from the Fed yesterday with the dissenters. The Kospi, though, actually closing out April with its strongest monthly performance since 1998. Samsung had some pretty strong earnings this afternoon, but actually ended up lower, I think, partly on concerns around AI spending, which we know is big. And then sticking with Japan here, we've had mixed earnings too, but the yen has really been in focus. We saw it weakening beyond 160 to the dollar yesterday after the Fed decision. That's its weakest since mid-2024. But just here in the past hour, we've had 2 verbal interventions from authorities. We can see it coming back up around that 159 level, but really some worries around aggressive intervention and what we could see potentially in thin trading for the Golden Week period. So people are definitely on high alert.
Yeah, we're going to ask Jordan Rochester his thoughts in just a few minutes about this verbal intervention. But let's get over to Europe now. It's going to be a big day there as well. 2 hours into the European Open. Here's Justina Lee in London. Justina.
Good morning, Vonnie. Here in Europe, we're seeing a 5th straight day of declines for the Stoxx Europe 600 as oil continues to climb higher. Now, speaking of oil, the focus today is all about what the European Central Bank and Bank of England are going to do about those rising inflation expectations. And ahead of those decisions today, we're seeing kind of a pretty flat euro against the dollar, and also the German kind of short end bond yield falling a little bit. Now, we think about the trajectory for the ECB here. They've been on hold for a while, and markets are still expecting a hold decision for today. Same with the Fed, same with the BOE, but all eyes will be what they're projecting ahead, because expectations are for like 3 more rate hikes later this year on the back of those higher oil prices.
Justina, thank you. Justina Lee there. And yes, we saw that a divided Fed yesterday, taking away the easing bias language in some senses, with 3 dissents on that particular issue alone. 4 dissents, obviously, in total, if you include Governor Myron, who will no longer be governor because Fed Chair Jerome Powell is going to take that position now that his Fed chairmanship is up. We finally got clarity on a few agenda items, let's say, yesterday. But central banks around the world obviously grappling with this, and it's not easing today, at least. We had Brent crude trading above 126 earlier. Now, the June contract is expiring today, but we're seeing it in the July contract and in contracts several months out that this wartime high is being reached today. Is it going to cause secondary price effects? Well, no doubt it is. The 30-year yield just below 5% now. It was above 5% earlier in the session. After the Fed yesterday, we saw those yields rise. But basically, if you look at the 2-year yield, we're up at least 12 basis points now just since Monday alone. Let's take a look at futures, because we had some, I don't want to call it mixed earnings. I mean, mostly it was good, but more capex, right? And even that is barely keeping NASDAQ 100 futures in the green. Obviously, investors weighing the potential for AI revenue versus the amount of capex these companies are spending and coming to their own conclusions, all with this war percolating in the background. S&P futures are flat right now, and the dollar index is down more than 0.1%. That yen story, a truly amazing story today. India's rupee is also at a record week mark. All right, let's get to some individual movers now. Over to London again, and Chloe Melly. Chloe.
Good morning, Vonnie. Big tech has organized itself very neatly in between winners and losers. On the losing side, we've got Meta and Microsoft falling because of concerns around this AI spending and the pace of growth. And then on the winning side, we've got Alphabet and Amazon, which seem to actually be seeing tangible benefits, a tangible payoff from the AI investment, and therefore moving higher. Moving on to another tech story, and Qualcomm is also moving higher today after the chip maker said that it expects to make a lot of progress in the data center market, which will be really a key source of growth going forward, and also said it sees some recovery in the Chinese phone industry. And so we are up more than 10% for that company. And finally, Stellantis is down after investors questioned the sustainability of its supposed turnaround in North America, because a lot of the performance in that market was actually driven by price cuts and one-time gains as well. And so we're seeing a lot of weakness there, down almost 7%.
Chloe Melly, thank you so much, Chloe, there in London. And coming up this hour, more on the Fed and a drumbeat to the BOE and the ECB with Jordan Rochester of Mizuho. And later in the hour, we'll dig into those tech results with Angelo Zino of CFRA. But first, oil hitting a wartime high with Brent touching above $126 a barrel earlier. President Trump reportedly will be receiving a briefing on new military options for action in Iran. That's according to Axios. Joining us now is Bloomberg's Onur Ant in Dubai. Onur, is there anything to suggest that military action will be any more effective if Trump does decide to take some action again?
I think the reasoning behind the possible military action that is clearly being considered in the U.S. Right now at the White House is that it could do the trick in terms of breaking the deadlock. As you know, Hormuz remains shut, and both sides want the other one to reopen or lift their restrictions around the waterway first. And so far, there has been no movement, although the ceasefire is now almost a month or 3 weeks old. So it looks like the Trump administration is considering a possible military operation to sort of break the deadlock and force Iran back into negotiation table. But there is no indication that a renewed fighting would do the trick after weeks of bombing across Iran by US and Israel failed to do so.
Yeah, Onur, if the US does start bombing or, making strikes again, is Iran capable of starting up strikes for its part again? Because that would be considered a breach of the ceasefire.
Well, it would be a breach of ceasefire no matter who started it, and I don't think the Islamic Republic would be reluctant to resume fighting. We have seen that both the US and Israeli attacks on Iran degrade their capabilities to a large extent, but that didn't stop Iran from being able to launch retaliatory attacks, especially on US bases in the Persian Gulf, as well as infrastructure assets in the region, wreaking havoc on energy assets and forcing many OPEC producers to curb their oil output. So there is no reason why Iran wouldn't be able to or wouldn't be willing to restart those attacks in the event of a renewed US military operation against that country.
Onur, we're essentially at a stalemate, right? So Iran responded to the US's proposal with its proposal, and I guess President Trump has decided that its proposal is not workable. So we have two proposals and various people willing to be mediators from Turkey to Russia and everywhere else. But what exactly is the situation? Is there any prospect for any more talks face to face?
Well, it really depends on what happened in Hormuz. That lies at the heart of the current impasse. As you mentioned before, Iran wants the US to lift its naval blockade, and Washington, in turn, wants Iran to stop its blockade first. And neither wants to compromise on who gets to open first. The problem here is that the US does not want just a reopening of Hormuz, but it wants that to be part of a larger peace deal, including Iran's nuclear activities. And that is why this resumption of negotiations, direct negotiations, wherever that may be, is such a tricky situation. And there is no indication since the last round of talks about 3 weeks ago failed in Pakistan that there would be or there could be a new round of talks, simply because neither side wants to sort of compromise on their red lines, with that red line on the side of Washington being the issue of nuclear enrichment.
Yeah, and that hasn't budged since the beginning of the war. Onur, thank you so much. Bloomberg's Onur Ant. Big tech results showing clear winners and losers in pre-market trading. Alphabet and Amazon saw more spending pay off, while Meta lagged its peers. Let's bring in the host of Bloomberg Tech Europe, Tom McKenzie. Tom, we were at something like $650 billion in terms of a capex spend forecast, and that's up to something like 725 now. Is that right?
That's right, $725 billion US dollars at the top end on these renewed and revived capex plans from these four big names that reported yesterday. you get the likes of Alphabet committing another $10 billion in terms of spending. You get the Metas of the world as well committing another $10 billion. You put it all together, $725 billion on top of the $640, instead of the $640 billion, to your point, that had been forecast for this year. So just another significant ramp-up in those capex spending plans for these companies. And to some extent, and you touched on this is a tale of two tech companies right now. We can talk about Microsoft and we can talk about Amazon, but really, where you get the real divide, the real distinction, this is a Meta versus Alphabet story. Alphabet being rewarded by investors despite ramping up capex, and that's because it's showing real growth in its cloud unit, where it saw an increase of 20% in terms of revenues year on year. That was a beat in terms of the forecast. They have a backlog. They have a backlog of more than $400 billion US dollars. And in terms of their AI consumer services part of the business, that saw the best quarter on record. So on all of those measures, and that includes the Gemini app, by the way, on all of those measures, Alphabet and Google are firing on all fronts, and so investors are relaxed, in fact, rewarding them for the capex spend. Meta, very different story. What they're seeing there in terms of the traction they're getting through, a little bit of the traction is coming through on the advertising side of the business. Top line, it was actually a beat for Meta, but the ramp-up capex they were putting down to the costs of inputs, the costs of chips, the cost of that data center build-out, and a failure really to articulate clearly from Mark Zuckerberg, the CEO, of course, of Meta, what the end plan is for their AI ambitions and for that spending. Their models still lag at the cutting edge. Yes, they have the advertising business. Yes, they're gearing some of that AI towards advertising revenues, but it's the longer term strategy around AI coupled with that increase in capex spend that seems to be causing investors in Meta to question what the prospects are in the quarters ahead.
Yeah, and even Mark Zuckerberg saying he doesn't have a very precise plan for how each AI product will be cultivated. So let's move to Apple. What can we expect to see from Apple earnings?
Well, Apple has not committed the spend around AI and the capex spend around AI compared to its counterparts we just talked about. And it lags, frankly, in terms of building out its own AI solutions. It's had to rely largely on Google and on Gemini. So the focus for Apple is going to be on the hardware side. And here is where things are looking pretty bright, particularly in terms of the relatively new product lineup when it comes to the laptops, the Neo laptops. They're really a segment play to try and undermine the cheaper PC laptop market. Some of these laptops are priced at around $500 US. There seems to be a lot of traction there. The question marks for Apple will be to what extent that very sophisticated supply chain they have is resilient to the global shocks that we're seeing, particularly when it comes to memory prices. So anything they say about memory, anything they say about that supply chain resiliency, and if that's holding up, along with that demand picture, of course, not just in the US, but in China, is going to be very significant for Apple as we look to those results later today.
Yes, we will. Bloomberg Tech's Tom McKenzie, thank you so much for that roundup and context. Now to other top stories trending on the terminal this morning. The White House is opposing Anthropic's plan to expand access to its Mythos AI model. According to the Wall Street Journal, officials are worried Anthropic doesn't have the computing power to serve more Mythos users without affecting the government's ability to use it effectively. BNP Paribas lower after disclosing first quarter credit provisions that were higher than estimates. BNP says it set aside $1.1 billion for the quarter. Meantime, net income beat forecasts, up 9%. And Glencore shares rising as its traders reap bumper profits from disruption in global commodity markets due to the Iran war. The rise in metals prices boosted its mining business. The rally in copper, zinc and coal helped offset the impact of higher fuel costs. Coming up, we'll be pushing ahead to the BOE and ECB rate decisions with Jordan Rochester of Mizuho Bank. That's next. This is Bloomberg.
The three dissenters and others who could have supported that, and others who were, who were voters and non-voters who preferred it, they all supported the rate decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And what are markets doing?
A deeper division at the Fed. Three officials going against the easing bias language amid increased uncertainty fueled by the war in Iran. Joining us now is Jordan Rochester. He is head of FICC strategy for the EMEA region at Mizuho Bank. And Jordan, thank you so much for joining. And we're seeing repercussions across the world today. I think that we can talk about this verbal intervention from the Bank of Japan, really aggressive intervention, as being partially an impact as well of the Fed decision, right?
A little bit. So what you've seen is a triple whammy of factors for why the yen should be weaker during this war. You've got high oil prices. This is a massive problem for Japan's terms of trade. They are massive energy importers. So that should lead to a weaker yen on its own. You've got higher global yields, especially in Europe and the UK, weighing on the sort of carry trade that usually harms the yen. And then you've also got equities near the record highs. So a triple whammy of good reasons for why the yen should be weaker, yet the market hasn't really chased it as much as what the Japanese or government is suggesting. The models I have, sort of short-term fair valuation models, if you plug all of those inputs in, it suggests that dollar yen should be at 167, and we're not. We've been trading around 158, 159 for several weeks now because of the threat of foreign exchange intervention from the finance minister Katayama and the FX chief Mamura-san, and we're currently just below 160.
Yeah, I mean, Katayama saying literally the timing for taking bold steps is nearing. I mean, the market definitely seemed to listen to that with this weakening, but we're still, you know, in the 159 handle area, right? Is there going to be a time in the next few days where the Bank of Japan will have to intervene?
They've essentially said they're going to. In all of the sort of verbal interventions we've heard over the decades from Japan, this is probably the most strongest. I think Mamura-san said something essentially saying, you will regret not listening to me. In other words, this is my last warning. So if intervention doesn't follow, if dollar yen goes back above 160, that would be very surprising. And so all we can say is a matter of time and wait. But I would just say for anyone considering trades out there, this is, because of the FX intervention risk, a very low Sharpe ratio trade. If you're trying to sell the yen based on the macro fundamentals like I just talked about, 167 being where we could be trading to, it's just probably not going to get there because the market's reluctant to chase it, because when you get FX intervention, that's 3 to 4% against you usually in the history of interventions on a single day. It's just not a good trade, and so we're going to be hovering around these levels for a while, I think.
Jordan, I want to ask you about the Fed because we have a lot more clarity since yesterday, right? We know that Kevin Warsh is going to be chairman now, and we also know that Fed Chair Jerome Powell is going to move to a governor position, and that there's more unease on the FOMC about the potentially persistent secondary effects of this oil price shock. What does it mean for yields and the US dollar?
Well, I think it's quite interesting timing. His Majesty the King visiting the US, and now the FOMC looks to be more like the Bank of England. You're getting much more dissents on the votes now, thanks to Myron, but also because of these three other members arguing there shouldn't be a bias to easing in there. Well, I think what you're going to see with a Warsh Fed is more of the same in terms of this sort of vote split being something that's much more common. The years of unity under Powell, Yellen, and Bernanke are long over, it seems. And I think that it could be the case that when Warsh arrived, you've got Myron and himself pushing the case for rate cuts, but you could see the FOMC, regional governors and others arguing the opposite. And so you could have, for the first time, a Fed chair who's outvoted by the rest of the FOMC, first time since 1982 with Volcker.
So what would you be doing in terms of positioning? Because between the war actually ongoing, you know, oil prices skyrocketing, nationally pump prices are at $4.30 yesterday, and in California they actually topped $6. There's real pressure here, and it's getting to be more persistent. Would you be buying bonds, for example, here with yields this high, or are they going to go even higher? Yeah, absolutely not. I would not be receiving rates here and buying fixed income. But we have to acknowledge that we have sold off quite a lot quite quickly. And the hardest part of this war is not really predicting the ebb and flow of diplomacy between the US and Iran or the probability of military action. That is hard to predict. The hardest part is the ability of the White House to jawbone the market with essentially false optimism via Axios reports and various others that could slam the oil market lower with just one headline, as we saw over the past month or so, and that would see rates rally back. So I'm paid rates here. I do think that we could price in the idea of one hike for the Fed by the end of 2027. We're getting close to that idea being in the market pricing now. But I am aware that it all could tumble on one headline. So we have to adjust our positions and trade it from a smaller size. All right, Jordan, we have to leave it there, but we'll be watching out for the ECB and BOE this morning as well. That is Jordan Rochester of Mizuho Bank, and our thanks. Coming up, Amazon considering a reboot of The Apprentice. A look at what's making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, Defense Secretary Pete Hegseth's first public appearance on Capitol Hill since the war began. Hegseth castigated members of Congress for questioning the war in Iran, which the Pentagon estimates has cost $25 billion and 14 American lives so far. The hearing came just before a 60-day milestone that some in the GOP have said could become a pivot point for their so far unconditional support of the war. Next up, the Washington Post, reporting on the Supreme Court sharply weakening a key provision of the Voting Rights Act. The Post says the ruling limits the consideration of race in drawing voting maps and potentially ushers in Republican gains in the House. And the Wall Street Journal reporting Amazon is discussing a potential reboot of The Apprentice, with executives considering casting Donald Trump Jr. as the host. The Journal says Amazon hasn't approached the Trump family, but its deliberations are part of its push to appeal to conservative supporters and broader audiences. That's your front page headlines, and this is your macro picture as we head into the Thursday session. S&P futures lower, the dollar lower, and the 10-year yield all the way up to 4.41 after that Fed meeting and as oil prices just skyrocket. This is Bloomberg. It's 5:30 a.m. in New York City and 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A potential escalation in the war with Iran pushing oil to a 4-year high. The U.S. said to be weighing new military options. Alphabet leading the way with a solid payoff from its AI spending. Meta lagging. Apple is up next. And Treasury is now steady after a divided Fed sent the 30-year yield above 5%. PCE and spending data are on deck. Let's take a look at these markets, because look at Brent crude. Now that is the current contract and it is expiring today, but it's above 118. We got to 126 and change earlier. WTI above $107 a barrel. And this all as the war continues and President Trump may be weighing more military options. We also had that hawkish hold at the Fed. 3 dissents over language that points to future cuts. And then this morning we had aggressive verbal intervention in Japan. Asian currencies really feeling the pain from these oil prices at records. Look at the 30-year yield. It topped 5% earlier. If we take a look at futures, even with mostly fine earnings yesterday, we're seeing futures just barely in the green. The S&P and NASDAQ 100 futures now pointing to higher opens. Earlier, the S&P was looking to open lower. The dollar index down about 0.2%. Asian currencies really across the board are weaker today. We saw the yen top 160, and both finance minister and the currency chief come out with aggressive verbal intervention. Let's get to some individual movers now with Chloe Melly in London. Chloe.
Good morning, Bonnie. It's a tale of winners and losers in big tech this morning. We're seeing Microsoft, but in particular Meta, falling because of those growing concerns over AI spending, while on the other hand, we're seeing Alphabet and Amazon move higher because it seems that their AI investments are actually paying off with some tangible benefits. Moving on to another name in that tech sector, which is the chip maker Qualcomm, which is moving higher, up more than 11% this morning after saying it is making inroads in the data center market that will become a key source of growth going forward, and it's also benefiting from a recovery in the phone industry in China, and so we are up quite strongly there. And finally, Stellantis is down after investors question the sustainability of this expected turnaround in the very important North American market, because the performance in that market was driven primarily by price cuts and by one-time gains from tariff refunds as well. So there are some questions there, and therefore we are down quite a bit, down almost 7% for Stellantis this morning.
All right, Chloe, thank you so much. Last trading day in April, and here's where we are. That's Chloe Melly. Let's get to Washington now, where President Trump is set to receive a briefing on new military options for action in Iran. That's according to Axios. The report sending oil to a wartime high. Brent crude currently trading just below 117, coming off just a little bit, that contract expiring today. Bloomberg Kasia Klimashinska joins us now. So what's the word in Washington, Kasia? What kind of military options does the president have? And, you know, is there anybody saying that this might actually bring Iran back to any kind of negotiating table?
Ronnie, hello. So the bottom line is that the ceasefire between the U.S. and Iran is now at risk because President Trump, according to Axios, is going to get a briefing today outlining some potential military options, one of which would be a brief but powerful attack that the U.S. would be hoping that it would bring Iran back to the table to discuss its nuclear enrichment plans. But there are also other possibilities that President Trump might look at today. One of them would be an attempt to reopen at least part of this key waterway, Strait of Hormuz. And finally, another one, a special operation in which the U.S. would try to get a hold of Iran's nuclear stockpile. So this is the briefing that the U.S. Central Command Admiral Brad Cooper will bring to Trump today. He did talk to President before in the last days of February, and some sources told Axios that that briefing encouraged Trump back then to go ahead with the military operation. So that's perhaps why we see those dramatic movements, especially in the oil market today, out of concern that we will see more military action in the Middle East, not only from the U.S., but perhaps also from Iran retaliating.
Right, and no clear strategy really to bring Iran back to the table either. It's not clear that more force rather than persuasion will do anything other than further entrench Iran. Now, moving to domestic issues, it seems like the DHS shutdown is nearing its end. Bring us up to speed on this.
So that's after 75 days of shutdown of the Department of Homeland Security. That's the department that is enforcing immigration, anti-immigration policies of the Trump administration, but also is responsible for verifying the safety of our luggage at the airports. So finally here we see some movement. Republicans in the House have passed part of the plan that would finance the department yesterday, and they are likely to act again today. It's mostly just Republicans because, remember, 75 days ago, Democrats said that they won't fund the department anymore after the tragic violence in Minnesota that led to shooting of 2 Americans there.
All right, Kasia, thank you so much. That is Bloomberg's Kasia Klimashinska. Turning to markets now, a lot to digest today. Treasury is a little steadier after a slump driven by the Fed's hawkish hold and anticipation of that, I should say. 30-year yields now back just below 5%, having topped that level a little earlier. Joining us is Bloomberg's Ven Ram. So, Ven, has the market repriced? Is that the move over at this point, repricing for an FOMC that's maybe a little more concerned about persistent inflation?
Well, I think that, the path of least resistance for rates is definitely higher from here. Because, as you mentioned, there was this dissent, massive dissent within the Fed, within the FOMC. And I think that, the Fed has projected a core PC of 2.7% for this year. We can almost disappear. We can almost banish any thoughts of inflation dissipating at any point soon to 2.7%. I think that we are going to get a much higher read on inflation in the coming months, thanks to the energy shock. So I think that, the markets are still not pricing a hawkish Fed, because if you look at the VERP action, if you look at the action on SOFR rates, I think it's a pretty flat curve still. So I think that, the markets are underpricing the risk that the Fed may have to increase rates. But, it's clear why the markets are positioning the way they are, because of Warsh's previous pronouncement that the interest rates can go lower with a new paradigm. But I don't know how he could do that, particularly considering the dissent. So I think that the path for rates is higher from here.
Yeah, the Warsh impact may be cushioning the blow a little bit, as you say, at least for now. Let's move to the Bank of England and the ECB, because we're going to get, rate decisions there too, and they're also grappling with the same issues, Ven. I mean, what happens to currencies when those decisions come out if they don't sound any more united than the Fed?
Well, I think that the Bank of England has got an imperative to act, because, they've been missing inflation. They're missing the inflation target for the better part of 5 years now. So the markets have already punished gilts severely this year. And I think that if the Bank of England says that there is no urgency to act, I think that the markets will punish the Bank of England by sending rates higher. That may be ironically supportive of the pound for the time being. And in the case of ECB, Vonnie, I think that, although the ECB has said that they won't hesitate to act, the markets are most keen to hear when the first rate hike will come. And if they say that, they're willing to raise rates as soon as in June, because given the oil price spiral and it's already close to the adverse scenario. So I think that if they suggest that, I think that the markets will get slightly calmer, ironically, because, it shows that they are willing to stamp out second round inflation.
Yeah, and then, it took some time, but the Japanese authorities finally came out with the big bazooka, if you like, of verbal intervention, at least today, right, Ven? Because we saw the yen above 160 for several hours. Will this work? We're trading now at, 159 and change, but that's, still pretty weak.
Exactly, as you said, Bonnie, 159 and change is exactly what it is. So what it shows is that the yen hasn't moved that much despite the jawboning. And the markets, frankly, have grown inured to the idea of jawboning from the Bank of Japan and Japanese currency officials because, they've been saying it for months now without actually following through on their actions. But even if they do act, I think that the upside for the yen is very tactical. It'll be about 3 to 4%, maybe 5% on a good day. So I think that's as much as you can expect. But the question is how long any gains in the yen will be sustainable. And that's not going to be sustainable simply because the Bank of Japan is behind the curve. It was already behind the curve before the war. And it is even more so now after the war because of the likely inflation overshoot. And of course, the BOE themselves raised the inflation forecast for this year, next year. So I think that if they continue to drag their feet on raising rates, the markets will punish the JGBs, and that will mean higher yields, and that will also mean a weaker yen. There is no escaping the longer-term trajectory of the yen if the BOJ hesitates to act. It doesn't matter what the currency official says. It's what the BOJ does that matters for the currency.
All right, we'll see what the BOJ does next. Ven, thank you so much, Bloomberg's Ven Ram. And don't miss our interview with National Economic Council Director Kevin Hassett. That's at 9:30 a.m. New York time. Now to other top stories trending on the terminal this morning. The White House is opposing Anthropic's plan to expand access to its Mythos AI model. According to the Wall Street Journal, officials are worried Anthropic doesn't have the computing power to serve more Mythos users without affecting the government's ability to use it effectively. Saudi Arabia's public investment fund plans to stop financial support for Live Golf after this season. An announcement is scheduled today that will detail Live Golf's next business steps. Live declined to comment. The demise of Live would leave the players who left the PGA Tour in a state of professional limbo. Bill Ackman's purging Square USA down 18% in its IPO debut. The combined closed-end fund and alternative asset manager raised $5 billion, short of the high end of $25 billion it was aiming for 2 years ago. Coming up, we'll dig into the report cards on AI spending with Angelo Zino of CFRA next. This is Bloomberg.
The coding models have gotten so good that they are now contributing in a significant way to the rate of improvement of AI itself. And so the AI is really good and it's getting better as a result of the quality of AI. And so kind of recursive self-improvement is this industry term here.
John Collison there, the president of mobile payment provider Stripe, on its AI strategy. So return on the AI spending speed front and centre this earnings season. Alphabet a clear winner with a solid payoff. Meta, though, lagging, and you can see it in the pre-market moves. Let's bring in Angelo Zino of CFRA, who's running on just a couple of hours sleep, I think, Angelo. Talk to us a little bit about the hyperscalers. We've got this massive amount of new spending, and we weren't really expecting it this quarter, were we?
No, I mean, not necessarily. I'd say it did play out largely how we thought, in the sense that you look at both Alphabet and Meta, they just really just tweaked the numbers higher. I mean, Alphabet went to 190 billion at the high end. They were looking at 185 billion previously. And then when you look at Meta, I think they boosted the high end by about 10 billion to 145 billion. So, in our view, those are very modest increases, but I think very good the fact that they held those CapEx numbers and outlook for the year. And then on the Microsoft side of things, that was, if there was one company that was going to significantly ratchet the numbers, it was going to be Microsoft, and that's exactly what they did, alluding to 190 billion. They did basically cite, the supply constraints that are out there, which is probably also the reason the other two tweaked the numbers also higher. But at the end of the day, when you look at the trajectory of these three companies, I'd say largely kind of how we expected it to play out.
Yeah, I mean, it is interesting, though. Mark Zuckerberg really wasn't apologetic at all. In fact, he admitted that Meta doesn't have a very precise plan for how each AI product will be cultivated. Investors aren't taking it this morning, Angelo. Will they in general?
Yeah, I mean, I think as far as Meta is concerned, that was the one that had the most to prove going into this quarter. And, I'd also say they probably did the least, they served themselves the least in terms of the trajectory that they threw out there in terms of, talking the AI story and monetization efforts. They didn't really give, I think, as many details about the potential ramp up in products that you can see in the monetization of those, new LLMs and what have you over the next couple of quarters. So I think, the negative reaction you're seeing in shares here this morning largely reflects that, as well as the need to continue to spend aggressively. I think investors really want, a strong story and greater direction on how that AI spend is going to be monetized. And Zuckerberg just didn't do that on the call.
Is getting data centers online going to be a huge problem, Angelo? I mean, some of this increase in capex was because of, component costs going up because of the Iran war and so on. It wasn't just new spending, let's say. But it does seem like there could be more of a block, let's say, to getting data centers online. And how much will that present problems going forward?
No, I think that's a fair point. And, when we start thinking about data centers and data center installations going online, especially amid the higher expected CapEx spend, and not to mention as you go into 2027, I mean, we just heard Alphabet talk about sharply higher spend in 27. Again, the higher spend is justified in the sense that the demand is there. I think the issue is going to be is we are just running extremely tight across the supply chain, whether it be memory, whether it be CPUs, whether it be on the optics side of things. There are so many bottlenecks across the supply chain, and that doesn't even go into taking into account the energy concerns and need to find the energy to kind of run these data centers properly, which we think is going to be more of an issue by late 2027 into 2028. So there are concerns as far as getting these data centers connected and getting all that supply on in your hands. But that being said, at least over the next 2-3 quarters at this point in time, we think most of these hyperscalers, they've got a good grasp on things.
Just in terms of each company's fundamentals, there's a broad spectrum, right? Are some of them more exposed to problems emanating from higher oil prices, persistent inflation potentially, and just the Iran war in general? Or, are others of them better able to hold up with these weaker macro fundamentals?
Yeah, no, it's a good question. So I think as far as Alphabet is concerned, they're probably best positioned right now just because of the backlog. I mean, they essentially talked about a nearly doubling of their backlog on the cloud side, quarter over quarter. The demand visibility is there for this company, not to mention what they're doing on the search side of things. Even with macro uncertainties out there, search is usually the last thing to get cut on the advertising side of things because of what they offer to advertisers. I would say, and the ROI there, I would say in terms of the risk, that the name getting hit right now in terms of Meta is the name that you would have to acknowledge is more prone to some of the macro uncertainties, some of the Middle East uncertainties. They cited it on the call as well in terms of missing their daily active user numbers. So that would be the one most at risk. I think Microsoft really did a good job in terms of talking up their story on the call. Obviously, it's not being rewarded here pre-market, but nonetheless, in terms of what they've done with Copilot and their cloud business, I think overall they're executing extremely well. But that's something else. That's another name you do have to watch out for in terms of where budgets go amid macro uncertainties.
Absolutely, Angelo. The hard part's done. Thank you so much, Angelo Zino of CFRA. Staying with earnings and consumer names, including Hershey's and Molson Coors, reporting before the bell. Bloomberg's Jennifer Creary joins us now for more. Jennifer, we're just beginning to hear in earnings calls things about the Iran war and higher oil prices and how they're impacting business, essentially. What will we expect to hear today about the consumer?
Yeah, listen, I mean, with a lot of these companies are highlighting the impact of conflict in the Middle East on consumer sentiment, but also energy pricing. That's really eating into the amount of costs that these businesses can swallow. So on the consumer front, it seems like a fairly mixed bag. So we've got Hershey's on the one hand, the chocolate maker, expected to post fairly positive results. Analysts are citing an early Easter as giving them a bit of a boost in Q1. Now, Hershey's only recently, earlier this month, said that it expects organic net sales to grow 2 to 4% every year through to 2028 and beyond. So it's fairly bullish, but of course, investors will be looking out for further commentary on whether conflict in the Middle East or other macro factors will be affecting its outlook going forward. We've also got Wayfair, the home furnishings provider. Much of its growth is expected to come from overseas rather than the US. The US has really suffered from slow app downloads, but also weaker consumer sentiment. And on the other hand, there's also Molson Coors, the beer maker, expected to post another quarter of volume declines. Now, Molson Coors, it's not a great time to be a beer maker at the moment. Consumers are really pulling back on their drinking. But, you know, it's made a couple of acquisitions as of late. Atomic Brands, for example, the cocktail provider, Molson Coors, essentially trying to diversify some of its holdings. So companies are trying to spread some of that risk across its portfolio.
Jennifer, we'll hear what they all have to say on the calls, and we'll also get some travel companies too to give us some insight, like Hyatt and Royal Caribbean. That's Bloomberg's Jennifer Creary. Coming up, rate decisions from the Bank of England and European Central Bank will get you set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today, the final trading day of April. More earnings, of course. We have Hershey, Caterpillar, Eli Lilly, all before the bell, and then Apple, the big one after the bell. Also rate decisions from the Bank of England in just more than an hour, and then the ECB at 8:15 a.m. Eastern. Plus we get plenty of data today as well. US PCE at 8:30 a.m. Eastern, along with GDP data, personal income and spending, and jobless claims. Let's take a look at some movers pre-market. There are going to be a lot of very volatile stocks trading today. Alphabet extending post-earnings gains this morning after a strong return on AI spending really cheered Alphabet investors. A whole different story for Meta. Its spending plan offsetting solid results. Also, Mark Zuckerberg's unapologetic tone on the call. Qualcomm, another winner, up more than 10% in the pre-market from yesterday's slew of earnings after the firm said it's making headway in the data center market. And then this is your macro outlook for the day. It could be a tough one. April not going out like a lamb at all. Brent crude is lower now, but it topped $126 a barrel earlier. We have S&P futures barely higher, and the 10-year yield down 3 basis points after a phenomenal move this week. That's it for Bloomberg Brief.